Okay, good morning, Amplified Traders, testing. If you can hear me, please type Y, 22nd September, 8:35 in the morning. Test, hello. Hope you're all well and survived the relatively quiet market activity yesterday. There were one or two opportunities. I will be reviewing those. But let's just have a look, first of all, at this morning's market activity. We've not been too short of action either. I've just got one trade on at the moment, which is the DAX. So we're going short the DAX. I'll show you my ladder. It was looking a bit healthier than this a while ago. There's the ladder in the DAX. Just trying to get short. I was umming and ahhing whether to take that pivot level as a target or not, 99.19. I think then it was Jimmy that said, no, you've got to go for 9900, so that's where I placed my order, just above that, and that's who I will blame should I not be able to take anything out of this trade. But a bit of noise, obviously, in the short term, and if you're, I'm joking, Jimmy, of course, a bit of noise in the short term. Looking at that pivot level, still looks heavy around this pivot level. I'm still quite happy to hold this trade at the moment. Euro stocks and the S&P both coming under a bit of weight also. Have a look here at the bottom right hand side of the screen. I've got gold breaking up through the pivot level. We've had T-notes also push through the pivot level. We had quite an extension lower there, 17 all the way up towards 19. Two-hole prices on the break of a pivot level, and the Bund grinding higher also. So certainly a risk-off trade this morning, and it's not just Volkswagen that's coming underweight, although of course that is really the major story from yesterday. Volkswagen, the world's second largest company, their shares getting hit over 20% on the news that they had been fiddling their car sensor board to allow it to show lower emissions than was actually true. Really, this is just a reflection, I think, of competition in the car industry and how the pressure that car manufacturers are under to reduce emissions whilst still having decent performance off the vehicle. But the fact that they actually, Volkswagen, the noises that they're making at the moment are incredibly apologetic, incredibly sorry for this mistake, quote, mistake that they have made. I mean, this is absolutely not a mistake. This was a clear effort to mislead the public. Those people that bought a Volkswagen believing that their emissions were at a certain level. This is, so here Jimmy's saying 18 billion being rumoured now as the potential fine for Volkswagen. 18 billion. That's no small amount for a car company. I think we've become used to fines given what we've had in the banking industry, and throwing billions around seems to be quite dealable. But yeah, this is a huge imposition to it. Oh, there we go. The DAX there just popping down to that level where I've got the order. I can't find my ladder anymore. I just didn't get filled. There we go. Just been filled now on that DAX trade. So 9900.03. So Jimmy, oh wow, that was a very, very handy exit indeed. Thank you very much for that shout. Let me just see if I can get my ladder up. There we go. So just one contract, 962 euros on the DAX. Look at that exit on the top right hand side of the chart. Can you see? That was I'm going to take my stop off. Well, that was fortunate to say the least. I think we're now right back at the pivot level, but that's the importance of technical analysis there. Can you see that exit? And I'm not a huge technical analyst, as you know. I don't love technical analysis, but that call of 9900 there, Jimmy, was absolutely spot on. So where did I place my order? Not at 9900. Because that would be ridiculous. If you've identified 9900 as a level of support, don't place your order at 9900. I placed a few prices above 9900, and that's pretty much exactly where we're hit. We're now trading back at the pivot level, and I expect there to be some degree of chop now in this indice. Euro stocks finding support on yesterday's support level as well. So we're getting a whole degree of risk off at the moment in European equities. I think the fact that, this is just what the markets did not need with Volkswagen, because it's not only Volkswagen that's being sold off here, it's all car companies, because you can bet your bottom dollar if Volkswagen were doing it in order to manipulate their emissions ratings, other car companies around the world would have been doing it. Absolutely certain. And you can see the likes of Peugeot, Daimler also taking some big hits on the way down as well yesterday. So just what the market didn't really need, given the vulnerability that we now have. What were the main market movers yesterday? Well, really it was Fed speak. And Fed speak that was unwinding the dovish Fed speak and the dovish action that we had from Yellen on Thursday. So very dovish commentary from Yellen on Thursday, talking about the global, here we go, DAX European equities on their lows again. Very dovish commentary coming from Yellen on Thursday. And this is what happened in T-notes on Thursday. We had a huge move higher, no move on rates in September, and also very little chance of a move of rates in 2015. Yesterday, so here you've got my T-notes trades. We're trying to go short. I was trying to go short S1 on T-notes. That ended up working actually nicely. You can see the final 6 being taken off here at 16, not at the 127.11 low, but c'est la vie, that's life. T-notes now breaking back above the pivot level. But why did we get this move lower yesterday? Well, we had, what was it, Lockhart and Dudley. I think I've got there, certainly Lockhart coming out saying just because Yellen was exceptionally dovish on Thursday, he still sees the first rate hike coming later in 2015. I do not believe that, not little 1 inch. I don't know. Is anyone here? Put 2015 or 2016, type it in the room. If you're in the 2015 camp, put 2015. When will we see these first rate hikes? 2015 or 2016? Jimmy, 2022? Peter, 2017? What about in the new room? What do you think, guys? What year will we see the first rate hike? Now, there's an interesting... I don't know if you guys are able to see this article, but there's an interesting... Oh, Harry, 2015. Yeah. I mean, it could still be 2015. But this is a good FT article here talking about Fed risks dropping the reins on US policy. Check this out. Look at this first paragraph. I really like this review from the FT. In the past 5 years, 15 of the OECD's 36 member countries have raised policy rates. So in the past 5 years, 15 OECD have raised rates only to cut them again. So most countries, as you know, have been cutting rates. Those that have raised rates have simply then cut them again. Last week's decision by the Federal Reserve to hold the policy rate steady showed that there is yet to find some confidence to be the 16th to raise rates, perhaps worried that as soon as they've raised them, they'll only have to cut them again very quickly. And the Fed is really lost at sea here, and I know Piers talked about this with you in the market briefing yesterday, but the Fed's really lost at sea. So you had a very dovish Yellen on Thursday. You then had Fed policy members coming forward on Monday, yesterday, trying to take out some of that dovish stance, which is why T-notes pulled lower somewhat, which is why you had a move in the Bund. There's a good opportunity and a sympathy trade going short the Bund on that move in T-notes. But the Bund recovered that sell-off very fast. Now the Bund trading towards Monday's highs, actually. And keep an eye on the Bund. You've got a gap in the Bund just above 155.32. Before then, we get to Thursday's high, or Friday's high, I should say, 155.45. I just want to look a bit further out on this Bund. The reason being, if you go back over the last kind of 3 weeks here, we're now in some interesting territory. Yeah, above 155.50 odd. You can see that's the August high as well. You then start to look at the pops where here, this is when you had the Chinese market sell-off, the equity market sell-off pretty much at its height, right? If I add a study and if I go analog overlay, add the DAX to that analog overlay. Wait one moment, let me just bring this all in. We got 90 minute versus 90 minute, yes. Trying to bring that out, 1 second. Here, okay. Pretty much that's it. Oh, look at the DAX, still going now. Wow, huge move lower. European equities still continuing their move lower now. Yeah, so where were we last here in the Bund? If we were to break above those levels, well, that's when European equities really were on the back foot. That's when, uncertainty was at its height in recent weeks. So what the Bund is telling us and what T-notes are telling us, and look at gold as well. Gold is firing higher at the moment. What gold is telling us is that this isn't over. Wow, pop higher in gold. There's some real buying here going in gold. I'm gonna try and get a long in on gold actually. I did go long gold yesterday. Well, you can see my trade there in gold yesterday. I'll be interested in getting a long gold today as well. The problem is with gold, and I've been talking about gold a lot, is I can think of 100 reasons why gold's a buy, but unless other people are buying it, it really isn't moving anywhere fast. So I'll be keeping an eye on that. Fast, can you move Chris into the Amplify live room, please? European equities still on the back foot then, guys. We've got no major data coming out today, so it's all quite quiet. You wouldn't think that looking at the markets. You've got the Euro stocks down through S1 as well. This is firm risk off. So guys, I'm going to leave you to trade this volatility. I'm going to get back involved as well. I thought, well, that was a nice exit on the DAX, certainly. If we do get a retest of 9,900, I'll be interested. Bear in mind, Euro stocks, you might get a classic 3150. That was yesterday's afternoon support. S&P coming up to S1. Also, we found support there yesterday afternoon, 1944, pretty much spot on. Look forward to trading this action with you guys in the room. I'm going to cut the market briefing slightly early so we can get involved in this. So in times of, let me just have a look at the data that we've got out today. There's no tier 1 data whatsoever, I'm afraid. Let's just have a quick look at the calendar. If we go down 10 o'clock, UK CPI trends, chain store sales, 12:45, only minor. Richmond Fed, 3 p.m. EU consumer confidence, 3 p.m. So perhaps after the cash market open, you're going to have to wait for the cash market open for any data, but that's not stopping our opportunity at the moment. Risk off, European equities leading the way lower. Keep your eye on these levels in the S&P being dragged lower by European equities. T-notes, bunds, gold, all higher. We've been talking about oil as well, slowly grinding lower since the break of the pivot 47.26. This stacks is still going. Guys, good luck taking advantage of this opportunity. I'll see you in the room.